Welcome back to this CNBC TV18 special on new bank licenses. Will it usher in a new era in banking? We've been speaking to Deepak Parekh, quite clearly the person best placed to speak on and advise on what kind of options the Reserve Bank can look at in issuing new bank licenses. Well, Mr. Parekh, the issue of public sector banks. You know, when you are giving these licenses and inviting fairly powerful interests to come and set up a bank, are you not being unfair to the public sector banks? In the first place, you're ready to trust private sector. Then why should it be that government should have 51%? Today you speak to Mr. Bhatt, you speak to any of the chairmen. They're so worried that 51% will be reached and they will not be able to raise capital unless the government subscribes to a rights issue. Isn't it being unfair that if the public sector banks are owned by citizens, then you're actually emasculating or tying down that category? Shouldn't that be, thought out?
See, we have to come to a political environment in India where public sector, government holding in public sector could come down to 33. This round, they've managed again very well by taking a large loan from the World Bank, recapitalizing public sector banks, so the government holding has gone up. And now, next round, when the banks want public sector banks more capital, they'll come back to 51. So, government and RBI has very cleverly solved 2 to 3 year problem of some of these banks which were getting to that level. So let's see what happens in future, whether the political environment is right to bring it to 33 or have voting rights for 51 but have equity holding of 33. But one interesting thing on the discussion paper is that they are also encouraging industrial groups to first have an experience by buying regional rural banks. Yes. You saw that part. Yes. So that, if an industrial group wants to buy a regional rural bank, and there are many, many of them, they can first do that, get their experience, and then get a banking license. So,
what's your sense, if that option had been available, you think that would have been a great route even for you? Or you think if you have an option now...
frankly, I have not even seen many regional rural banks, what size, what asset quality, management, but one has to see that. I'm not fully aware of. But I know there are many, many regional rural banks.
Fair point. Sir, coming to the other tricky issue of foreign investors. At the time when the licenses were given to you all, it was capped at 40%, including NRI and FII. Then, of course, the law changed and for other private sector entities, 74 could come. What do you think should be the right approach now? The Reserve Bank has left it on the table, and we have to keep in mind that already some positions have been taken on existing institutions.
No, it is. I think it's RBI's policy is right in the discussion paper, the point they are making, that foreign holding, which includes FII, FDI and NRI holding, should not exceed 50%. I think if it is made clear in the beginning, we would have restricted it, because we don't like to be called a foreign bank. We are called a foreign bank. We don't like it to be
overnight.
And it was 74%. Now 74, they've made it to 50. If we were told earlier, we would not have done an ADR issue, or we would have stopped the FII investments or the NRI investments. So I think this time they've made that point because they don't want Indian banks to be called foreign banks. And here again, I would say, to the credit of Reserve Bank is batting for us and ICICI, that we are not foreign institutions. It's the DIPP and the government, the Industries Ministry, which has bracketed us as foreign institutions.
Yeah, it seems more like an ego tussle more than a pragmatic fight. Well, the other issue that they have put in at least 3 times, and with such vehemence, is we will not allow real estate entities with interest in real estate to get a banking license. You bat for that?
Yes.
Okay.
So I think Reserve Bank has always been allergic to real estate, and the bubbles are always created in the real estate market. So they are trying to be sure, rather than sorry, that let real estate companies not apply for a banking license, and they are very particular about it. Now, whether it means real estate lenders or real estate construction companies, landowners, one doesn't know how to read. Now, does it mean that LIC Housing is in real estate, or HDFC is in real estate, or are they talking of the DLFs of the world, or they're talking of the Unitex and DLFs of the world? We don't know. Real estate is a very broad term. Sure. So it includes whether LIC Housing, we understand, wants to have a bank. Now, LIC Housing is lending to the real estate sector. So does that prohibit them? But they are not building homes, or they're not buying land and building. So that it's not very clear.
I would think that one of the reasons why they're doing that is very often, there can't be statistics on this, but real estate has been a generator of black money. So, an easy money laundering outlet. Okay. Well, the other issue on, the issue of corporate sector itself has been this whole too big to fail idea. The world is coming to terms with it. Of course, it may be, we are too early in the curve. We don't have that big entities. But when big entities, corporate houses set up banks, and when something like the Lehman crisis happens, then, they're already under stress. And at that time, you've got this 3.5% interest rate money lying. It's extremely tempting for a hungry man to get to that capital. Don't you think this will actually be a danger, giving it to corporate sector, because the duress will come, simultaneously. It's pro-cyclical.
Yeah, but I don't think every corporate house is going to get a banking license. A well-diversified shareholding group will get it, and where even the promoter's holding in that company is limited. If the promoter has 70-80% in a company and they apply for a license, I don't think they'll get it. And as I said, this is a discussion paper, and we'll have to wait and see how it evolves and how it comes into the open. But I think industrial houses, it's time we gave an opportunity, a chance, particularly to industrial houses that are running good, well-run NBFCs, and some of them have grown large. And they deserve a banking license because of their shareholding, because of the manner in which they run these NBFCs. So I think one should give them a chance and not grudge an industrial group. And again, because the experience in the past has been bad, as I've said. Yeah. So if the experience in the past was good, then it was different. Now, how many well-diversified groups do you know who's eligible?
Fair point. So finally, what do you think the banking landscape is going to look like, say, in 2 years? Do you think it's going to change at all much?
Well, it's changing gradually. We need more financial inclusion. I would say the business model of a new aspiring bank should be their thrust or their emphasis on reaching to the villages, to rural banking.
That's where I spoke to a couple of industrial houses, people who
financial inclusion is an in thing today, and there are various ways of approaching unbanked areas. There are various methods of making banking accessible to the people in rural India. And we have to think about
is that will become profitable only after a while, and that they should be allowed the more profitable areas of banking and not be entirely, told that will be priority, and only when you do inclusion will you be allowed.
I have a different view. That is more profitable today than opening a branch in Bombay, where the costs are so high, cost of hiring people, cost of real estate. And what business are you getting? How much deposits will you get when Bombay is an overbanked place? Or for matter Bangalore, or for matter Delhi, or for any other urban city?
So a condition that second, 2, 3 and 4 tier cities would be a tenable condition according.
I think so. I think we at HDFC Bank are more keen to now access rural India, because we see that Kisan Gold Cards, money against gold, they are hugely profitable. Accessibility is an issue. But these are profitable, and we are working towards that. And we are working towards that because we see that future profits or future growth is going to come from that sector.
All right. Mr. Parekh, I do appreciate you taking time for us. You said you approached it as an outsider, but I think the Reserve Bank will be very happy with the kind of comments you've made. Thank you very much.
You coerced me into doing this interview.
Well, coerced, then it was worth coercing, Mr. Parekh. Thank you very much for joining us. Well, that's all on this CNBC TV 18 special. Thank you very much for watching.